My name is Luis Macias. I'm the CEO of GrainChain. I think on the business side, we've been in the agri business for a couple of years. We focus on raising money to be able to develop and deploy, expand and grow. And the conversations I've had in the last couple of months are, do you slow down and pump the brakes and stop developing and stop creating and stop pushing liquidity out to farmers when they need it the most? Or do you focus on where you can add the most value? And I think the investors that's what they're looking for. That's the experience I've had. If you're pushing value and you're growing and you're building a business that's supporting the food system, which is what we're all worried about today, I think that the money comes. May it be more expensive, may not be as plentiful as it was 6 months ago. It could be. But I think at the same time, especially what we're talking about today is creating financing opportunities for producers when they need it the most, when the inputs cost the most, when being optimized and digitized is what's going to keep us not only alive, but keep everyone fed. So I agree. There's a lot of uncertainty. I agree that that a lot of the capital that was going out is becoming more limited. But I think when it's focused, it's there.
Luis, what does that enable? Like bringing fintechs or more financial technologies overall to the ag-tech market or to the agro market in general? What does that enable? What type of capabilities does that bring additionally to the growers, producers, and the value chain?
We have to not only see that bringing financing to any industry enables a lot of growth, right? But getting into reality is that historically, agriculture is a very difficult area to lend. Banks don't have agronomists. Banks don't understand cycles. Banks don't understand that because a cost is one thing at the beginning of the season, it's very different in the middle. And I think that bringing in this kind of technology enables for a lot of the heavy lifting and a lot of the heavy thinking being done by systems. The same way we did it for insurance, the same way we've done it for a lot of other industries where it was a tremendous amount of information that needs to be produced and calculated, but it's all there. We have the capacity to do it. And I think that investing in a lot of first mile technology, investing in a lot of data-driven technology that is automated is going to change the way that we can bring money to the individual farmers, to all the different supply chain providers. I think the biggest issue is that exactly what my counterpart here said is that we're 20 years behind. We are still, Brazil is a phenomenal industry market, but I still go to countries where they run their balance sheets and loans on Excel, and they barely have a conceptual knowledge of what's going to happen. They let the money out, and who knows how it's going to come back. If you go to a bank in a more developed country, they know exactly where the money is. They know exactly what's coming back. They know exactly what their risk level is. So by creating systems and implementing real technology in these areas, we're going to be able to take the heavy lifting from the banks. We're going to be able to enable all types of financial participants to create instruments that are real, that are accessible, and they're not predatory. Because the reality is when they don't understand, that's when a lot of these predatory instruments come in. That's when a lot of these middlemen are the one who make the money. And we have the capability and the technology to create these profiles and to do a lot of the technologically heavy lifting. I've visited a countless amount of groups and farms that have 10,000 farmers, 5,000 farmers, and they have to do the financing. And they have to do the financing because nobody else will. And that's why this is not a trend. That's why this is not something that's just coming out of nowhere. The 90% of the associations or groups that do the financing want to have nothing to do with it because there's a high burden in being able to do it. They should be using that money to scale operations or buy more product, but they're using that money that normally institutions should be a part of. So this is not a trend because all you see are inventions made out of necessity when we can create technology to take that out of that sector and bring institutional money, money that's a lot lower cost and has real purpose in this industry.
I'm fully convinced, right? I think you build a good case. Market is big. There's a big opportunity. So my natural question now is, what do we still need to keep growing in ag fintechs? What are the next, barriers we have to cross to be able to keep growing? And why did it take so long? Meaning, like, the opportunity is obvious. There's a huge market to be addressed, right? Lots of capital can be deployed there. Why is it happening now? Why this growth, this accelerated growth in the past years? Is it because of the abundance of data available, or the lowering cost of data, the technology getting into the fields and then enabling for other solutions, faster connections and connectivity all over the farms? So what did actually enable us to get here, and what are the next trenches we need to go through to keep growing?
I think historically, this industry not only has been overlooked when it comes to technology, it's not sexy, right? When big VCs come in for the last 20 years, they want a big splash, but adoption is like climbing up a wet hill, right? Is getting individuals to digitize, getting connectivity in rural areas. That takes real kind of funding. Getting technology implemented in the thousands when sometimes the margins are thin or none, exactly how you said. Am I going to buy seed and fertilizer, or am I going to buy systems and connectivity? What is it going to take? It's going to take a tremendous effort on our friends over here, because the reality is that we all need to invest in this. We need to invest in extremely talented individuals who are part of the industry, but we need support on the government side and on the private investment side. And the reality is we're never going to stop eating. We have, I've been to countries in the last couple of months that are having consistent food security meetings, saying we are not sure if we can ensure with the current rate of inflation and the cost of the commodities that everyone can eat. How do you combat that? Is we have to invest in being efficient, productive, and having good and easy access to money. And we have to do it. This is, they say necessity is the mother of invention. We're growing as a population. Our food necessity is much higher. Our margins are sometimes not very effective in a lot of these bulk type of commodities. High value commodities have a little more margins, but these don't. So I think that this is the time and the need for this kind of investment. And I think that at the same time, this is about true sustainability. And I think there's been a tremendous amount of focus on what we're going to need to do to be able to feed the population in 20 years. And this is, I think, the very beginning of that process.
Why most of the ag fintechs are focusing on deleveraging or buying debts from the distributors, I guess, instead of just offering direct access to farmers for new lending or for new debts, debt facilities, etc. Is there a way to build that without the middlemen? That's the question.
We have focused on financing the farmer directly. We've had to go through the distributors. We've had to go through the cooperatives or the big associations, because there's no way I can have a sales force that can hit 4,000 farmers for really when I can hit one distributor that has 4,000 farmers through them. But as we are growing and gaining data, we are able to access the individual farmers directly. We're building platforms and interfaces that allow them to not only access this directly, but use their distributor as a touch point. So as this grows and as we mature, our data gets richer, and we start we start having the ability to give opportunities for individual farmers to reach out, because they have the historicals. They have the technology to access the loans. They have the technology to access the insurance policies, because we have the data. But we have to crawl before we walk, and the distributors are truly helping us crawl and get to each individual point. Without that, there's just not enough money he can lend me to be able to go out there and do it, because I can hire 10,000 people, and we're not going to have the cost versus benefit value to be able to get the money out there. And I think that we can't undermine the role that the distributor has had in the last 20 years in how he's been able to get the farmers to try different inputs, how he's been able to get the farmers to try different products. And it's going to be the same for finance, it's going to be the same for insurance.
So any thoughts on how to evaluate investments in Agri-Fintechs focusing on carbon positive and regenerative agriculture financing?
I think that until there's proper standardization and understanding that, that's kind of the Wild West right now. I've been part of many conversations where you have very large U.S. farms that are taking advantage of certain scenarios and they're getting paid, but there's zero standardization and the infrastructure is not there. But I think it comes a lot back to what we're doing to create a lot of these fintech, agri-fintechs, is digitization, is infrastructure, is as we are starting to grow and equip our farmers with the ability to record, register, and automate a lot of the data points from the farm, we're going to be a lot closer to be able to standardize the practices, record them, and push them off to companies that are willing to pay for this kind of practice. I think it all comes down to we have to continue to invest in infrastructure to be able to even understand if this is being done and how it's being done when there's a standard.
We are all talking a lot about Web3 these days, and we know blockchain, tokenization, etc., has impacted and is still impacting and will impact a lot the financial industry overall and fintechs, of course. How does that impact agro, ag-techs, ag-fintechs, etc.? Do you see any impacts, cases you could share, blockchain, tokenization, crypto, etc., related to agro?
So we're a blockchain-based company. We've been settling on the blockchain since 2018. We have had the capacity to not only create smart contracts, but we've had the capacity to be able to settle almost instantly in many situations. It's given us the opportunity to build not only the financing models, but it allows us to lower a tremendous amount of risk by automating the process of not only creating the contracts, but paying, integrating with IoT to be able to get the information and be able to settle based off of that. We've settled hundreds of millions of dollars on the blockchain, and it's been effective. I don't talk about it as much as I use it. And I think that the technology that's behind what we're doing is extremely efficient and effective. It's let me work cross-border, and it's let me work among many different countries. But when I start the blockchain conversation with a producer, I lost on block. So I think that we need to continue to encourage extensive investment in these new technologies. I think that this is not a sales pitch, it's a technology. We need to invest in the growth of the technology and the application of it, and it's done wonders for our company.